Hey everyone, it's Sterling here from Day Trading Forex Live, and it is Wednesday, January 23rd, 2013. I just want to get a quick video here of the pound dollar. This is a 15-minute chart of the pound, and based on the typical smart money cycle, we've come to the conclusion that they finished their cycle to the downside. Again, based on the hourly chart, looks like they finished their third cycle to the downside. And the set criteria has been satisfied for that cycle to be complete. And we've picked two high probability manipulation points today. I'm not really going to get into why we were selecting which ones we did. Just want to make this video fairly short, but we've seen a trade set up based on the manipulation of the first level, and that's where I've taken the trade. I've taken the trade with an entry of 19, and the reason I took it on an entry of 19 is this was the candle break. We had a nice set of essentially an engulfing candle back to the upside, showing the break below the stop run point and the rejection back up above. Typically, after we see the manipulation, we have a very high chance of seeing the market show a strong follow through to it. So with that being said, after we've seen that manipulation, this third candle gave us a pullback. For me, the entry of 19 was definitely worth the risk, and we'll let this trade run. Again, with an entry of 19, that's going to put my stop just below the 1.5800 level, 57.99, and I feel comfortable with that stop just because the overall lows here are 58.06. So even if we see a stop run on the overall lows at 58.06, I would expect that level to hold and hold for the next push to the upside. So hopefully the cycle is complete. We've seen a nice stop run. We'll let this trade run, and I will be back with the update of this trade. Alright guys, we are back with the conclusion to this trade. As you can see, we had a nice move on the pound last night, just as expected. Got a little bit fortunate. We had a deeper pullback here. We pulled back to, see, the low is 1.5808, and actually on MB it was a little bit broker, or a little bit lower, which is the broker that I use for placing most of my trades. And so that cleared my stop by a little over a pip, just about a pip and a quarter. Missed my stop by, and that was kind of what I talked about last night. Even if we saw the stop run below the overall lows here of 1.5806, which was, as we zoom back, you can see it was these lows from the 21st of January. Like I was saying, even if they do come down and they take the stops below that point, I felt like I was still protected. And with an entry of 19, whenever we're sitting in what we term as level 3 accumulation, in other words, the simplest way to explain that, if you're not familiar with market cycle and how the banks tend to cycle the market, at the end of their cycle, that's what we term as level 3 type accumulation. And what happens during that time is positions are closed and new positions are entered. So during that time, the safest trades are manipulation from either the range high or the range low, and that's essentially what this trade was. That was the overall low we had set at 1.5806, and I was taking it, as you guys know, from the original manipulation up around the first breakout point of 1.5822, and had an entry of 1.5819. So it was a very simple trade, a standard, one of our standard setups. And when we're sitting in level 3 type accumulation, one of the things that we really want to do is we want to clear trades out before they come into an upper manipulation area. Now, on this trade, I only managed to take 40 pips off of that. Generally, in level 3 type accumulation, I'll take the standard 20 pip stop and 40 pip take profit. And the reason I do that is because you're stuck in that accumulation. You don't know if you're going to break out. Now, in this case, there's actually quite a few more pips here to be had. See, from 19, the overall highs, there's actually about 73 pips. So I left 33 pips on the table from what I could have got. But the reason why I'm happy with the 2-to-1 in this situation is that over time, when you're taking trades in level 3 type accumulation, or in other words, the accumulation that happens at the end of a market cycle, it's often better to take your 2-to-1 and very simply get out of the position. So that's what I did here with this pound. It was a nice trade, and was a trade where my take profit personally was hit was hit while I was sleeping with this first move to the upside. I really wasn't looking to capitalize on the entire move. I was just looking to take the 40 pips and run. So it was a nice trade overall. We'll see what happens tonight. We're still sitting in that level 3 type accumulation. In fact, the Euro's been in it for the last 3 or 4 days. So we've had trading opportunities, but the trading opportunities have been that range bound manipulation at the range high or the range low. So more than likely that'll be the case tonight. We'll have to see what happens a little bit later on as we do the daily market review a little bit later on tonight. So really the key to take away from this video, guys, is after you see the market cycle, trading that manipulation at either the range high or the range low is generally your safest bet. And this trade just exemplifies another clear visualization of how banks tend to enter positions. They enter positions by taking the stops at key high probability manipulation points. If you understand where these high probability manipulation points are, you can really pinpoint when the banks are going to actually enter a position. Then you do what we did last night, which was you wait for your fail-safe, which is we don't just randomly enter the market as it comes into that level. We wait for our high probability points to be broken, and then for it, in this case, to get quickly rejected back up above. So what that shows us is that they took the market beyond the area where we expected the stops to be. They took the stops and then very quickly ran it back up above. Now they did come for a deeper stop hunt here, but nonetheless it showed some stop taking above this first point, and that's why I took it. Really nice trade, and hopefully you guys can put this technique into use. Look for those key high probability points. If you don't know what a high probability point is, there's a lot of information on the site, www.daytradingforexlive.com. There's a lot of information on the site when it comes to picking high probability manipulation points, and you can really narrow it down. Then you wait for the manipulation at those levels. Once you see the combination of all of that, you have a very, very good indication of what the banks are doing. And the bottom line is the banks control the volume. Therefore, they control the direction. So if you know what they're doing, you know with a great deal of certainty what the next direction of the market is. And you have some very high probability setups where generally you have a very good risk reward associated with them as well. At least 2 to 1 in this case. Gave up quite a bit more than that, but again, I was happy with my 2 to 1, and run on those level 3 type accumulation trades when we're at the end of a cycle. So guys, again, I hope this video was helpful. Make sure you check out the site daytradingforexlive.com, and I look forward to seeing you all in the next video. Until then, happy trading.